The Committee of Insurance and Financial Services shall come to order. Mr. Clerk, will you please call the roll to establish a quorum?
Representatives Carter,
Present.
McFall,
Here.
Coleman, Stone,
Here.
Breen, Rogers,
Here.
Scott, Young,
Here.
Fitzgerald, Grant, Harris,
Here.
Markkinen, Bazat,
Present.
Aragona,
Here.
Bruck, Nyer,
Here.
Smith. Madam Chair, you have a quorum.
Thank you. We need a motion to adopt the minutes of May 18th, 2023 as printed. Representative Young moves to adopt the minutes as printed. Hearing no objections, the minutes are adopted as printed. Next on the agenda is a vote for House Bill 4197, which we heard testimony last week. Before we proceed, I'm going to read in the cards of support. Not wishing to speak, but support Mac Jones of Laura. Not wishing to speak, but support Alex Morris of the Michigan Bankers Association. Not wishing to speak, but support Melissa Seifert of AARP. They spoke.
Yep.
Okay. And they spoke. Not wishing to speak and support Paul Tower, Team Wellness, correct? Okay, thank you very much for that. And now I will entertain a motion. Let's see. Representative Fitzgerald moves that we report House Bill 4197 as amended as a new substitute with recommendation.
Representative Carter,
Yes.
McFall,
Yes.
Coleman, Stone,
Yes.
Breen,
Aye.
Rogers,
Yes.
Scott, Young,
Yes.
Fitzgerald,
Yes.
Grant, Harris,
Yes.
Markkinen, Bazat,
Yes.
Aragona,
Yes.
Bruck, Nyer,
Yes.
Smith.
Yes.
Madam Chair, you have 12 yeas, 0 nays, 0 pass.
Thank you. Next, we'll hear testimony on House Bill 4331. Joining us virtually to explain the bill is the bill's sponsor, Representative Karen Whitsett and Hassan Beydoun, counsel to the mayor of the city of Detroit. Thank you for joining us. The floor is yours.
Good morning. Good morning, Chairwoman and members of the committee, and thank you for allowing me the opportunity to testify to my bill today. Hassan will be going into more details regarding this testimony, but in plain terms, the bill fixes issues with current fire escrow statute. To increase the fine insurer withholding amount to $20,000 in order to bring the total in line with the current cost of demolitions. And to amend the statute to allow cities like Detroit the option not to only demolish abandoned buildings, but repair them should they see fit, which would be of great interest to the community to be able to have that as an opportunity. While a simple fix on the surface, the repercussions of this bill in neighborhoods like mine is significant. The city of Detroit has been plagued with blight in many forms for years. One such being that abandoned buildings and houses are just that, abandoned. In many neighborhoods, you find an abandoned property on just about any given street, including mine. I have two, technically three, sometimes multiple on just one block. In fact, there are houses on my street, as I just said, as in close as right door to me, right next door. This person has also left this home. The gutters are falling off, and it has approximately 5 holes in the roof right now. It's truly a kick in the gut to see this in person. You can look on the Google Maps, which any of you can see, even though they're not updated, so you can see how bad it currently is. You would honestly think that the streets are fine, and they're not. And people have done this and they think that I'm exaggerating, but I don't know how fast people understand how quickly a home can become in a state that needs to be demolished. It doesn't take much. It takes one fire, one person leaving, and a home is stripped within a matter of hours. When going out on the doors and speaking with the constituents on the phone, one or more of the common issues that we hear about in the office is that they're concerned about the abandoned houses and buildings in their neighborhood. So I'm sure you understand the concern, especially when you have children, women who are out here and have these things that live next door to them, the risk of having break-ins to their own homes, rapes, the houses being set on fire, which means yours can be set on fire, as well as other houses on the block. Some people call hoping for an update on a building that was scheduled to be demolished months ago, while others are calling and begging. There are so many buildings in a condition due to the part to outdated fire escrow status. When the withholding amount for insurers isn't enough to fully demolish the building, combined with the fact that the city doesn't have permission to repair these buildings instead, funds sit unused and these buildings remain in their dilapidated conditions. Again, while the bill appears to be a simple fix, the ramifications are great as it allows the city to do more to clean up the blight and remove hazardous damaged buildings from the communities like mine. As of yesterday, I had a building that has been abandoned for years. Someone has purchased the building, did nothing with it. Trash was building up, trees are overgrown. And when I say trash, I mean there was even a boat on the corner of my street. So this person had been fined and fined and fined, and the city really slapped the fines on them now. And so much so that the city actually came in, cleaned up the lot, got the boat out of there, and has since painted the building, which makes it look extremely better, not just another abandoned building. I'm proud to be joining with my counterparts in the city of Detroit to bring forth this crucial legislation, and I welcome your support. At this time, I'm glad to introduce Hassan Beydoun, who previously served as general counsel for the House of Representatives and now serves as counsel to the mayor of Detroit, Mike Duggan, who will be able to shine more light on the bill and address some of your questions. Thank you again for the opportunity to speak to you today. And I hope I didn't go too fast because I don't want to waste your time on a day that session is not in.
So with
Okay.
your permission, Madam Chair, I can begin my testimony.
Yes, please. Thank you.
Thank you, Madam Chair, and thank you, Representative Whitsett, for your leadership on this important issue for the city of Detroit. So Michigan currently has a fire insurance escrow program where if a residential or commercial property that's insured suffers fire damage of 49% or more, the insurer must withhold a certain amount of that total payout and send the money to the city that the property is located in. This is to make sure that the property owner uses the policy payout to actually repair, damage, or demolish the damaged building. And if the owner does so in compliance with local codes, they get the rest of the money from the city. If they don't, then the city can use that money to demolish the building or bring it up to code themselves. And generally, this really isn't a problem in most cities. Frankly, it's not a problem in any other city that I'm aware of other than Detroit, because the economics typically shake out in a way that incentivize property owners to repair their properties once fire damaged. In Detroit, historically, where property values were so low, the incentives just didn't exist the way they did in other cities. So abandoned properties, abandoned funds associated with damaged properties, these are all problems that are very unique to Detroit. And so that's why this statute is of particular importance to the city. And there's really two problems with the current scheme. So first, the withholding amount that's set in statute, which currently equates to about $15,000, has not kept up with the actual costs of demolitions, which have far outpaced the rate of inflation, as anyone in the construction industry knows. So right now, for example, you have this $15,000 withholding amount set in statute. The average cost of demolition as of today, is actually closer to about $24,000. So what that means is you have an ineffective program. It doesn't accomplish its purpose of ensuring that adequate funds are available to bring fire damaged properties up to code. And that means more blight, lower property values, and more threats to public health and safety. The second problem with current law is that it's too narrow in how it allows municipalities to use abandoned funds. In 2014, Detroit was successful in getting the statute revised to allow abandoned funds to be used to demolish any other damaged property in the city. And again, this is a very unique problem to Detroit, where you have these property owners who just abandon the funds. They don't want the money. They don't want the property. They just leave town, pick up and leave, and leave the city to deal with the property. And this is a very significant issue for us. We have thousands of homes that fall into this category. And so with all these abandoned funds have accumulated over time. We currently have $7 million or several $1 million sitting in an account that we can't use other than to demolish certain homes. This currently wasn't a problem, or I'm sorry, historically wasn't too much of a problem, because the goal was to demolish the homes. There really wasn't enough economic incentives to repair homes. It was really just demolitions that were the name of the game. That has changed dramatically since. Property values in Detroit have rocketed, and currently there's more economic incentive to repair properties in certain areas than there are to demolish them. And so the bill does two things. First, it changes the withholding amount to match the actual cost of the actual cost of demolition, which are currently closer to $20,000. And then second, it would allow more flexibility in how abandoned funds can be used, so that not only can they be used to demolish properties, they can be used to repair properties. And again, this would go a very long way in addressing Detroit's blight issues. And we urge the committee to support, and I'm glad to answer any questions, Madam Chair.
Thank you for your testimony, and thank you, Representative Whitsett. Members, are there any questions? Okay. Representative Breen.
Thank you, Madam Chair. I just want to clarify, this talks about properties. The emphasis has been on homes. This is for businesses as well?
That's correct. Businesses are covered by the program. There are different provisions that apply. For example, this withholding amount is only relevant to residential properties. There's a separate amount that I believe is up to 25% of the property's value that is withheld when the property is commercial, and that's not affected by this legislation.
Is that something that you think needs to be addressed?
I haven't heard any concerns along those lines, and looking at the city's data, I'm not seeing as many issues on the commercial side. And frankly, that's because the economics are a lot different on the commercial side. You just get less property owners that are abandoning their properties the way that we're seeing in the residential context.
A quick follow-up, ma'am? As far as the insurance payouts, about how long does it take for those payouts to arrive in the city's account, or what are the logistics or mechanics of that?
It's quick, a matter of weeks or days, if anything. The insurance companies have been good actors in that regard, and we haven't had any issues with prompt payouts from the insurance companies.
Thank you.
Thank you. Representative Rogers.
No, the good Representative Breen took all my questions, so thank you so much.
You're so welcome. Okay. Representative Harris.
Thank you, Madam Chair. On the automatic CPI, with inflation rates as they are currently, would you be open to limiting this to a 5% increase or CPI, whichever is less?
I think that could make sense. I would urge a start or a higher starting point, namely, so since the bill was written about a year ago, and when it was written, the average cost of demolitions was about $20,000. Since then, in just a period of a year, the cost has again outpaced inflation, and now we're at $24,000. So I'd urge the withholding amount to be reset at that, and then I think there would be enough room for that sort of revision to the inflation index as well. We're not opposed to that.
Okay, thank you.
Online is Representative Brooke.
Thank you, Chair. This is Representative Bruck. I appreciate the opportunity and thank you for your presentation. A question I do have, if Detroit is unique in this issue, and you said the property values are going up, I mean, what is the root issue if it's not, you said it was property values, you said in Detroit skyrocketed. I guess I'm trying to capture, why is this still happening then? And also you have a lot in funds that currently are held by the city are they not demolishing homes? These particular homes that are on the schedule? Because my understanding, if I watch the news and keep up, that they have demolished, I mean, countless homes and still continue to this day. Just kind of follow up on that. Thank you.
Represented through the chair, in response to those questions, really, and I apologize, I should have been a little bit clearer. There's two issues, and they may have been conflated. One are the properties that are already in the pipeline. These could have been properties that burned down a dozen years ago, that have been abandoned, that funds are sitting in the city's account for, and that we can only currently use for one purpose: to demolish properties. This would, with respect to those properties in that pipeline, allow flexibility to allow the funds to be used for repairs, and that's what's relevant to the increasing property values, and that's the changing dynamic there. The other issue is with respect to more of a prospective perspective, is that even with property values rising, we still have this issue of arson and burned homes, fire damaged homes. That's irrespective of rising property values, and you still have homeowners who, frankly, just aren't interested in fixing the property themselves or using the policy proceeds to do so. So we still, it's at a much smaller scale than it was several years ago, but we're still facing these issues of abandoned homes and blighted properties, and owners just get up and leaving because they don't want to deal with it, even though the economics are shaking out in a more favorable way with rising property values. In most other cities, the property values are high enough where, frankly, it'd be foolish. You'd be leaving money on the table to abandon the property and not use the policy proceeds to repair or demolish and sell accordingly. It really only is in Detroit where you have these unique economics that shake out the way they do.
Thank
Yes,
you.
Thank you. Thank you. And one follow-up on that would be, is the city also utilizing or asking for these funds to be utilized in order to resell these properties or to get them into, I know in the city of Monroe, down in Monroe County, the city is, I want to say, refabbing properties in order to, get rid of these properties off of, so they're a taxable value instead of owned by the city. The ones that, they have recouped because of non-payment, et cetera, abandonment. Is that a program that the city of Detroit is also looking to utilize these funds for, to get them useful tax-paying properties again?
Yeah, that can certainly be the case. It's not necessarily so. The funds can be used to repair properties that the city does not own, as well as properties that the city does own. And it's no secret that the city has a significant portfolio of properties with its land bank and otherwise that this could be used for. But really, it's very circumstantial. It depends on, it's a case by case basis and what other funds are available for those properties. Ideally, we would seek to use those funds first. And this would always be the use of last resort. And frankly, it's more for public health and safety type properties and threats than it is just for simply repairing homes and selling them.
Okay, thank you, sir.
Thank you, Rep. Bruck. Rep. Young.
Thank you, Madam Chair. Thank you all for being here on today. I appreciate this legislation of being a representative who has represented Brightmoor last term and parts of it this term. This is so vitally important. What I see is just another tool in our toolkit to help stabilize neighborhoods, to help stabilize communities. As my previous job, I used to be what's known as a district manager. That was somebody who was responsible for a certain portion of the city. I was the manager of District 1, which included Brightmoor. And I would get calls from senior citizens who would be concerned about the vacant property next door to them that had caught fire, that had been abandoned for years. They couldn't go and come without feeling unsafe in their own community. And so this just is one of those ways that we can help provide peace of mind for residents, as well as neighborhood stability. And so I'm hopeful that as we continue to dive into this, everybody will see the real significance and will be able to support it. So thank you all for the work that you've done on this, both you and our good colleague, Representative Whitsett.
Thank you, Representative.
Thank you, Representative Young. And I have a question for you. Would this bill apply to other local units of government and not just the city of Detroit?
It would. It would apply. Well, first, the fire insurance escrow program is an opt-in program, so it's up to each locality of whether or not they want to opt in. It's my understanding that the vast majority of larger municipalities do opt in. For example, City of Novi, Farmington Hills. This particular there's two different statutes, both that contain similar provisions that apply to different local governments with different population thresholds. The statute that's currently amended by this bill, I believe, would apply to municipalities with a population of 50,000 or more, or municipalities in a county with a population of 425,000 or more. There's a separate section that deals with municipalities with lower populations. So this would apply very broadly to larger municipalities that are above those population thresholds.
You good? Okay, thank you so much for your testimony. Thank you, Representative Whitsett. I'm going to read in a couple of cards. We have not wishing to speak, but in support of the bill, the City of Detroit, and not wishing to speak, but will speak if needed, Joseph Sullivan from the Department of Insurance and Financial Services. Okay, very good. And now we'll move on to our presentation from the Michigan Credit Union League and affiliates. We have with us today, we have Patty Corkery, President and CEO of the Michigan Credit Union League and affiliates. Thank you for coming. Please come forward. The floor is yours.
Good morning, everyone. Thank you, Madam Chair. Thank you, members of the committee. Turning this on will begin. Thank you. Thanks for having us. This is one of my top favorite topics, credit unions, and we're excited to be here. And I'm sure say some things you already know. I know a lot of you are very actively engaged in the credit union in our community, so forgive me if we're repeating some information, but hopefully we're sharing some new information and answering any questions you might have for those folks that are just starting on their credit union journey. So let's see. I'm going to advance these. Spacebar? Maybe I'll go up, down. Okay. Well, I know you all have packets, so as we're figuring this out, I have with me my esteemed colleagues, Kieran Marion and Haley Crombeen, and we also have Maria Moore in the audience as well. As I know a lot of you are aware, Kieran and Haley spend every day advancing the mission of our credit union so they can better serve their community. So I'm really proud of our team. We are fortunate to have some amazing talent. So some of you are also aware, we are a state-level trade association here in Michigan. We have 100% affiliation with our credit unions. So that means every credit union you drive past, every billboard you see, every TikTok video you see for a Michigan credit union, they are members of our association. And we work hand in hand with our national association, which is called CUNA National Association. So together, as a united associations, we serve a huge population around the country. So you can see we have together 130 million members of credit unions around the country through this working together with our national association. There are 34 leagues. Michigan is one of them, and we work hand in hand with our partners around the country. We serve together a lot of credit union professionals, those who work in the credit union industry. Right now there's around 5,000 credit unions, and there's various credit union service providers out there that work to provide products and services for credit unions, and there are 70,000 board members. Most credit unions in the country have volunteer boards, and we're very proud of that and their support of the mission of credit unions. And then we have what's called a CUSO, which is a credit union service organization. So you'll see up there CUSG. CU Solutions Group is a national CUSO. The Michigan Credit Union League owns 64% of that CUSO, and what they do is they provide products and services for credit unions so that they can better serve their members. So what is a credit union? I know a lot of you are aware of this, but under the Michigan statute, it means a cooperative. It's a not-for-profit entity under the Act, which encourages thrift among its members, providing a variety of financial services to their community and to their members. So they are member-owned. When you become a member of a credit union, you are not a customer. You actually own a share in that credit union and have a vote and have a say. So again, not for profit, not for charity, but for service. Credit unions serve their communities, they serve their members, they're people focused, not corporate profit. So they do accept deposits, make loans, and provide a variety of financial services. But being member-owned credit unions, they focus on lower rates, fewer fees, and higher levels of member service. So their board members, as I mentioned, are volunteers. They don't turn a profit to pay shareholders. They take money that they earn on non-interest income and turn it around and offer better rates and services for their members. That's how they work. So here in Michigan, we have 194 credit unions serving close to 6 million members. So almost 60% of the Michigan population belong to a credit union. So that's a lot of people. Nationally, that hovers around 37% of the U.S. population belong to a credit union. So here in Michigan, we're really proud of the fact that 60% of Michiganders are members of a credit union. So credit unions provide over $486 million in direct financial benefits to their members. And as I mentioned, that's through lower interest rates, higher deposit rates, and lower fees. So this results in savings of about $84 per member and $175 per household. Collectively, our 194 credit unions hold close to $100 billion in assets around the state of Michigan. There are over 1,100 locations and a lot of fee-free ATMs. So just as a comparison, as you can kind of see as you look to our for-profit financial institutions, traditionally across the board, credit unions are able to provide lower rates on things like autos, credit cards, unsecured loans, and mortgages. And in some of these areas, you'll see drastic differences, some not as big, but any difference in a rate is key, especially in the environment we're in now with soaring interest rates. The fact that we can save members money, even if it's just a 1%, is incredibly an advantage to members of credit unions. And that's typically why you'll see people going to a credit union over another financial service provider, because they do have lower rates. So working in the community is at the core of what credit unions do. We are really proud at the League to have our own foundation, the Michigan Credit Union Foundation, that our credit unions contribute to, and happy to report on the impact to you of the foundation. This is showing you last year what happened over the course of the year, the financial reality fairs that our credit unions engaged in. So this is when they go to schools and they hold a fair and teach kids what it's really like to live in the real world and how much things cost. I just volunteered at one of these fairs a couple of months ago, and it's really interesting to see them try and navigate a car payment, rent, groceries, clothes, and all of those decisions that you need to navigate as a young adult. And when they see what they make per month, I hope they all left that day and really thank their parents for all of the things that they do for them, because it's really shocking when you start to look at your budget. Our credit unions do these reality fairs all of the time. I was just talking to a UP credit union leader, and they had 260 students go through their financial reality fair in the UP, and it's just phenomenal the impact that those fairs have, and our credit unions do these quite regularly. So just last year, over 8,000 students went through a financial reality fair with their credit union, and we're super proud of that. Not only that, but a lot of credit unions you'll see are training even their frontline tellers on how to be financial counselors. When people come through their door or call the call center or engage in a chat online with their credit union, a lot of times they're going to be dealing with people that are trained in financial counseling that can give them guidance on a loan or a rate or what might work in their budget. And that's a critical process that our foundation helps sponsor the cost of that certified financial counselor training. And it's something that we're seeing more and more credit unions do, as they recognize that at all touch points with their members, they need to have people that understand finances and experience on how to advise their members. So a lot of credit union professionals are coming through with that financial counsel training, and our credit unions are engaged with our foundation in financial support of that. So if you look at the impact there, close to 40,000 students went through the financial reality fairs that credit unions offer since it started really in earnest in 2014, which is phenomenal. So when we talk about our credit unions, it's not just their brick and mortar, but they have student-run branches, which means these students at financial institutions actually work at the credit union in a student-led branch. There are over 350 student-run credit union branches in the state of Michigan, which we're really proud of, and our credit unions are also very proud of. So you can see here these kids acting as tellers for their students as they come in, which is just so fun and amazing. So as you can see, just through some of these talking points, our credit unions are industry leaders in financial education. Financial education is a core mission, and it's not just because they're trying to educate people at a young age to become a member of their credit union. It's because they recognize the importance it is for smart financial planning, because that makes a successful individual and somebody that can contribute back to their community. So they start to help these young folks make wise financial decisions, and it's never too late for people to learn, for sure. So also our foundation is involved in what's we call community enrichment grants. So the Michigan Credit Union Foundation awarded more than $79,000 in community enrichment grants last year. And this is grants to 15 different credit unions. And they come to us with different projects that they want to do in their community, whether it's help to finance a vehicle for a shelter or to provide support for a small business in their community that needs additional funding, or they want to become community developed financial institutions, CDFIs, so we help support them in that process. If there's a community that's in crisis, for example, the flooding that we had in Michigan or the tornadoes that we had in Gaylord area, our foundation just kicks in to work with credit unions that are helping people that are displaced from their homes, and that is something that they love to do and get involved in all of the time. So our foundation is really active and engaged. So switching gears, when you think about credit unions in the grand scheme of financial services, we are a small player. We know with some of the bank collapsing, I'm sure a lot of you read that a lot of our bigger banks just got bigger, right? Chase had to develop a new protocol for getting people to become customers of Chase because people left the failed banks and brought their money there. So when you're thinking about credit unions and when you're talking to people that want you to consider various things in the credit union space, we are a small part of the market share. Credit unions represent only 8% of the market share when compared to larger banks and some smaller banks as well. So again, a small but mighty player in financial services for sure. So at this point, all of us have dug into, especially I'm sure this committee has paid close attention to what's happened to some of the big banks nationally as they have failed. So those institutions are pretty unique and very different from our credit unions. Happy to report that all of the credit unions that I've been talking to since the bank failures, it really hasn't been an impact to our credit unions. They haven't had any sort of run on the credit union or any real concerns. They answered some questions on behalf of their members, but the fact that over 90% of deposits at credit unions are insured, it's certainly a different animal than what you see at some of these banks. So it really hasn't impacted us. Just talking to our partner at DIFS, they're hearing the same thing. Our credit unions are very well capitalized and in good position to withstand even potentially a looming recession that might be down the road. So we feel very comfortable that the institutions are strong. We don't face the same risks that these banks has faced. We have a diverse membership base, and our investments are highly regulated and examined. So without speaking on behalf of our regulators, I think that they would agree that the credit unions in Michigan, whether state or federally chartered, remain strong and very well managed. So another area that's critically important to our credit unions is protecting their members against financial exploitation and elder abuse. When you hear the stories of what happens to our elders in this space, it's just heartbreaking, all of the scams and the different things that happen to them, whether it be from somebody they know or somebody that they don't know. So more than 73,000 older adults in Michigan have fallen victim to elder abuse, which of course can be incredibly traumatic, not just to their wallet, but also emotionally. So this statistics led to the recent effect of the Financial Exploitation and Prevention Act, requiring financial institutions to report covered financial exploitation of vulnerable members. As a trade association, we were really happy to be part of the task force as everyone navigated what the best steps would be to protect our vulnerable citizens. And we were pleased to find out that a lot of our credit unions were doing this already. They have policies and procedures in place that trigger reporting or that trigger further investigation when they suspect that there's something happening with one of their older members. So just looking at the stats, there were close to 1,600 referrals made in 2022 on suspected elder abuse, which resulted in a 67% increase from the year prior. And there were 621 more assigned referrals in 2022. So it's definitely making an impact, and our credit unions are very passionate on this topic and looking out for their members of the community. So I mentioned we have a lot of CDFI credit unions. So this is Community Development Financial Institutions. They have to become certified. We show here 26, but Kieran reminded me that we had 3 more credit unions qualify for CDFI, so that number is actually 29. In order to be a CDFI institution, you have to direct 60% of your lending to economically distressed target markets. Our credit unions are jumping at the bit to become CDFI certified because this is their mission to serve the lower income parts of their community. So once they become CDFI certified, of course, it opens them up to be able to get federal and state dollars as well to help them support their communities. And you can see the impact that these CDFIs have. Well over 1 million members are supported by these CDFI credit unions, several branch locations, a lot of credit union assets and loans, and $6.55 of every $10 in deposits is deployed. So we are really proud of our CDFI credit unions. Our association does a lot to support them and try and get some dollars allocated to CDFI credit unions, and it is something, again, that just aligns directly with their mission of serving their communities. So just want to highlight something that credit unions around the country are involved in. It's called See You Kind Day. This happened last year on October 10th, and we're doing it again this year. This showcases around not only Michigan, but the country, what credit unions are doing in their communities. They shine a light on what they're doing to help make an impact, the donations that they're giving, the volunteering that they're giving, just really shining a light on how credit unions are different. It's an annual day of kindness, and we use it as a way to showcase what our credit unions are doing around the state. So last year we had 74 credit unions and partners participate. This is more than 3,500 volunteers, and more than 23,000 people were impacted. And you can see the impact just this one day had, close to $150,000 in goods and donations that came through and that we shined a light on See You Kind Day. Shout out to Maria on our team, who's taken this under her wing to make this a more impactful program year after year. This was only our first year of doing it. So this is just year one in these numbers that you see here. So we're really excited to see what this fall brings as we explore shining a light on credit unions and what they're doing in their communities. So that's my highlight overview. Hopefully you're learning something new. Happy to take any questions that anyone might have, Madam Chair.
Well, thank you very much for your very informative presentation. And we do have questions.
Okay.
Representative McFall.
Thank you, Madam Chair. You touched on why did the SVB collapse. One of the things I noticed you didn't list, though, was deregulation and the importance of what we do here, and especially at the federal level, which would have sparked the stress tests, which probably could have maybe stopped this possibly. Can you speak to why it's important, maybe a little bit as to why having regulations are important and not just being bureaucratic, but they're actually here to protect people?
Yeah, no, I have no doubt that that's true. And if you think about it, when you really peel back the onion on what happened with SVB, a lot of people think that it was really Twitter that led to the run on the bank, right? People becoming insecure of their deposits. And sure, were there things that regulators may have missed? You know, you're seeing a lot of people pointing fingers. As we navigate through this, talking to the NCUA, the National Credit Union Association, as well as DIFS, I haven't heard from anyone that there was any regulation that would have prevented something like that from happening. And here in Michigan, with the close relationship our credit unions have with their examiners, I'm confident that there wouldn't have been anything that would have prevented it from a regulatory aspect. What's awesome about our credit unions here in Michigan and the relationship we have with not only our federal regulators but our state regulators is the open line of communication, the examinations that happen on a regular basis, the cooperation that exists. So while certainly regulations are important, credit unions need to have something to measure against. I believe that at times there is a risk that overburdensome regulations prevent credit unions from serving their community. So it's a fine balance. But I appreciate your comments that certainly there are some regulations that are necessary not only for credit unions but to help consumers feel that their money is safe and sound. Thank you. Sure.
Thank you. Representative Breen.
Thank you, Madam Chair. Thank you for coming here today. I've been a member of my credit union since not going to tell you, but it's a long time. I'm really happy to see that you were taking part with the Elder Abuse Task Force, which we are doing a lot with, talking about guardianship. And I know today, thank you, Madam Chair, for bringing up Angela Whitworth's bill. That's also a step in the right direction. Are there any other, this can be an ongoing conversation, any other things that you think that we can do better to protect elders, but also other vulnerable adults or vulnerable people that you think any other ways you think the Credit Union League can play a role in making sure that these folks aren't financially exploited? Anything off the top of your head, or if you want to get back to me, that'd be great.
Well, I mean, just off the top of my head, and I'm not sure if this would come under the purview of this committee, but so much in the way of the texting and the emails and the robocalls that come in to elders is really how elder abuse can start. Now, there's various levels, right? So you can have a corrupt nephew walk his grandma or his elderly aunt into the credit union and sit face to face and try and start, taking some money from her. Those things are easier to detect, right? I mean, as you're sitting face to face with somebody, a red flag can go off that would trigger reporting or some further action of the credit union. I think the real exposure to our elderly community, and my parents are both in their mid-70s, are the phone calls, the emails that they get that target them there. So I think that more needs to be done to prevent these folks from being able to engage in that kind of context. But I'll chew more on whether there's more that we think credit unions can do. As I did mention, they all have pretty robust policies and training on their frontline team to try and detect elder abuse as they see it. Sometimes it comes through in wire transfer requests. For example, you'll see somebody coming in, trying to get a wire. A lot of it is stuff that's happening electronically. And unfortunately, you're going to see that rise more and more with the way that people are so deceptive and can get caught up in these scams. But so again, continued dialogue, and I appreciate the question.
Thank you. Just one quick follow-up. Thank you so much. I know the Attorney General has had a very robust program with some fairly entertaining commercials involving her own parents.
Right.
So I know that she's working on some things, and we're going to be working in tandem with her. And thank you for coming to the table and bringing your expertise.
I appreciate that. I did confirm with her those aren't her parents. She's like, her parents would be a disaster on those commercials. But they're amazing. She's phenomenal.
Thank you so much.
Yes.
Representative Rogers.
Thank you. Thank you for joining us today. Thank you, Madam Chair, for the opportunity. I just wondered if you could touch on, I'm hearing from my financial institutions in my district about cybersecurity issues. Can you touch on that a little bit?
Yeah, it's what, if you ask credit union CEOs, or I'm sure any financial institution CEOs, what keeps them up at night, it's that. And it's a very real threat. So I mentioned at the start we have 64% ownership in a for-profit QSO, where we own a firm, part owner of a firm that works with credit unions around the country to make sure that they're ready and can respond to a cyber attack should it happen. Unfortunately, there's really no foolproof way of avoiding those. It's really just making sure that folks have the training and the processes in place to deal with that. But it is something incredibly real, and as much as we try and mitigate it, I unfortunately, I think they're going to continue to happen.
Thank you. Representative Young.
Thank you, Madam Chair. A couple of questions, and thank you for being here with two of my favorite people, so they do amazing.
Great.
job. Just saying. So I was looking at this, and I was thinking about your 100, and I have a couple of questions. Your 130 million members.
Right.
And so I have a credit union account. I also have a bank account for our friends that are the bankers. Okay. I see she's over there like, no. But the credit union account is like the feel good account just because they're always doing something fun. My son, we entered a drawing. He won a computer, when he was in high school. We do all that kind of fun stuff. But here's the thing. 130 million members, and they all have an opportunity to vote. But how many actually vote? Because I've never voted, and I've been a member for over a decade. So how does that really work? I'm curious about that.
Yeah, well, if you're a member, you'll get notice of an annual meeting, and so you can go and vote. So for your board, and then they bring up topics or they give an update at the annual meeting. So a lot of credit unions still do these annual meetings in person, but they now allow access for folks to come in virtually. But they do happen. Credit unions are required to hold an annual meeting, and you can vote for your board.
Do you keep statistics on how many people participate in the voting?
We don't.
Okay.
And sometimes you'll hear not very many people show up. It's kind of like anything, right, that you all host. You never really know if it's going to be a big turnout. But they certainly have very specific requirements on how they notify their members of the vote. So it's really up to the actual person and how involved they want to be.
Okay, I get the notice. I just don't show up.
Yeah, you.
Okay. That was a follow-up, but here's my second
Okay.
question. So I'm looking, it doesn't have it, I don't see a page number, but on the page about the credit union industry is stable, over 90% of deposits in the Michigan credit unions are insured. Is it that the close to 10% are in excess of 250,000? I'm just trying to figure out who that 10%.
Yeah, and that would be the case. There's a pretty complex formula when you dig into what's actually insured. So you can have funds in one account and culmination being way more than the insured limit. So we have two different ways our credit unions can go in and plug all of the accounts of their members and run it through a formula to see what might or might not be insured. So I can't speak to the specifics of that because there's all sorts of probate account, you name it, available. But yes, so those would be on the uninsured side for sure. But, yeah.
Thank you, Madam Chair.
You're so welcome. And our final question, because we do have another presentation.
Okay.
And we would love to have you come back,
Okay, great,
round
sure.
2. But our final question is going to come from Vice Chair Harris.
Thank you, Madam Chair, and thank you guys for being here. We know the important role that credit unions play in our communities, and the chairwoman and I share one of those communities that's very active with financial institutions. So with that, so one thing that I didn't hear touched on in the presentation that I think would probably be a benefit to everybody is, do credit unions also play a role in financial services on the commercial side and even with local government?
On the commercial side, for sure. Local government might be a little trickier, but on the commercial side, a lot of our credit unions, more and more of them are getting involved in small business. So, for example, credit unions had an influx of small businesses become members during the PPP program when larger banks were refusing to work with a small business that might have only needed like $5,000 or $10,000. That wasn't really worth their time. Credit unions really stepped up and were giving as low as like $700 in PPP loans. And what became of that was you save a business from failing, they're going to become a very valued member. So commercial lending is definitely something that credit unions are getting more and more engaged with, but it's typically the smaller businesses, the people that larger financial institutions, don't carve out a lot of time for. On the governmental side, I don't know if Karen can comment on that a bit more specifically.
No, in somewhat. And for a lot of our credit unions, as you look at kind of the size of the credit unions and the market share, it's a matter of scale and some of the sophistication there. But some of them do participate, at least in tandem, with larger financial institutions in assisting local governments and municipalities and counties.
Thank you.
Well, thank you very much for your presentation. I wanted to know where some of the student-run credit unions were located, but we can do that
Yeah,
Okay, we
for
really,
sure.
we really appreciate your presentation. Thank you for coming.
Well, thanks, Madam Chair. Thank you, committee, for having us.
You're so welcome. And our last item on our agenda is a follow-up to the presentation by the Michigan Department of Insurance and Financial Services on Bank On. Here today is Ross Yednick, the Financial Service Legislation Liaison with the Department of Insurance and Financial Services, Chelsea Nesblett, Program Director of Housing Services for the City of Detroit, Housing and Revitalization Department, and Zach Edson Gagner, okay, Deputy Director of the Office of Financial Empowerment Department of the City of Lansing. Thank you all for coming. The floor is yours.
Thank you, Madam Chair, and great to be back here. This is always a great end of the week to be before all of you guys. I'm not going to take up too much time. You guys know who I am. I've been here a few times. About a year ago, in partnership with the Michigan Bankers Association and the Michigan Credit Union League, we launched the Michigan Open Accounts Coalition. In year one, we were able to increase the number of available accounts with both of those, with the help of both of those membership organizations. Year two, we're looking at increasing local support and growing local coalitions. There are about 100 coalitions nationwide. About 10 to 12 are statewide coalitions, Michigan's Open Account Coalition being one of the 4 that are housed in state government, and the rest are local ones. And this is really where the work at the local level is connecting people who are unbanked with the financial institutions with those accounts. And we've got 2 excellent coalitions that have been around in Michigan for a while now doing the work with that. And I've got Zach with the City of Lansing and Chelsea with the City of Detroit. And I will, if it's okay, just go over to Zach first and then go on to Chelsea. And hit the red button.
Good morning. Thanks for having me. So I just want to talk a little bit about our Financial Empowerment Center and our Bank On Coalition. The Financial Empowerment Center has been providing free professional one-on-one financial counseling as a public service since 2013. In that time, our FEC has served over 5,000 clients for more than 16,000 sessions. In addition to supporting clients, they increased their cumulative savings by over $1.1 million and reduced their non-mortgage debt by $16.6 million. The FEC has facilitated the opening of over 800 safe and affordable accounts for clients. The FEC is at the center of Lansing's Bank On efforts, offering a soft handoff to connect unbanked consumers with safe and affordable bank and credit union accounts. Our financial counselors have relationships with banks and credit unions in Lansing and leverage those relationships to assist clients in obtaining a financial product that aligns with their financial situation, needs, and goals. We know that the unbanked rate is just under 5%, meaning that it can be challenging to identify unbanked individuals. That highlights the importance of meeting unbanked residents where they are, and the more Bank On and MOAC certified accounts that there are, the more options unbanked consumers have. It is important to support DIF's Michigan Open Account Coalition because not all communities have Bank On coalitions or financial empowerment centers. In their absence, residents can rely on the work of DIFs and MOAC as they have expanded access and increased opportunities to use safe and affordable accounts. To close, I would like to briefly share the story of one of our FEC clients that has benefited from the use of second chance accounts at a financial institution. The client first attended the FEC in 2016 to inquire about 2 things. 1, opening an account at a local institution, and 2, a company that claimed it would consolidate and accelerate their student loan payments. Unfortunately, at the time in 2016, the client was denied an account at a financial institution due to their negative account history. Additionally, the FEC was able to identify that the debt consolidation company was a predatory one and showed that the client's payments were going directly to the company and not the client's student loans. The FEC contacted the Consumer Financial Protection Bureau and the U.S. Department of Education on the client's behalf, and fast forward to 2020, and the client was able to successfully open a safe and affordable second chance account at a local credit union. 3 years later, the client has saved money, increased their credit score, and achieved all their financial goals set in 2016. With their safe and affordable account, they are now looking into purchasing a home in the area. This work is about access, opportunity, and equity. It also has a ripple effect. It benefits individuals, financial institutions, neighborhoods, and entire communities. Thank you for your time.
Good morning to the chair and this honorable body. Thank you so much for having us today. My name is Chelsea Neblett, and I am the Housing Services Director for the Housing and Revitalization Department in the City of Detroit. I work on housing stability and economic mobility on behalf of Detroit residents. Similar to my colleagues in Lansing, we in Detroit have a financial empowerment center and a bank on coalition. Local government is uniquely positioned to deliver large-scale, high-quality financial empowerment services, including access to mainstream financial institutions. We launched Detroit Financial Empowerment Center in 2019 with 2 local providers. And in less than 4 years, we have provided over 6,700 financial counseling sessions, increased client savings by over $700,000, reduced client debt by $3.3 million, created 1,700 budgets, reviewed credit reports and scores, and helped clients open safe and affordable banking products. The Bank on National Account Standards provide us local governments with a benchmark for safe and affordable products. We are really grateful for the support of DIFS and MOAC in helping to achieve these goals. The need for safe and affordable bank and credit union accounts was evident during the pandemic. Many federal, state, and local relief programs were delivered quicker by direct deposit. This included unemployment support, economic impact payments, and access to the expanded child tax credit. According to the FDIC, the government relief payments helped to contribute to a drop in the number of unbanked and underbanked residents in the United States. Without access to an account, residents encountered longer wait times, faced unnecessary fees, and diminished access to critical resources. In the city of Detroit, we worked with financial institutions that promoted online account openings so residents could get access. Our broader banking work includes a coalition of financial institutions, community organizations, city departments, and philanthropic partners. We work to identify banking and account opening moments. So 2 of these initiatives that are really near and dear to us are our Grow Detroit Young Talent Program, which is a summer jobs program for Detroit youth. A first paycheck moment is an awesome first banking and account moment. So we are proud to say since 2018, over 1,000 youth have opened bank accounts or credit union accounts to receive direct deposits. This also allows us to offer financial counseling and talk about those future goals. So last year, we launched a pilot for students that were over 18 to do one-on-one financial counseling. Let's talk about credit. Let's talk about savings. Let's talk about debt reduction. Let's talk about managing student loans, right? All of those real-life programs. Another account opening moment that we work really hard on is with our tax coalition, which includes United Way, Accounting Aid Society, Wayne Metro, U of M Poverty Solutions. A tax time moment, a refund moment is a good banking moment, account opening moment. So we work to distribute door-to-door literature through door hangers around banking access, especially around the expanded child tax credit. How do we find individuals that are normally non-filers and may not be connected to mainstream financial institutions, get a return and get them banked or with a credit union partner? So we're really proud of the work that we've done, but we know there's more work to do, and so we're really grateful with the partnerships of DIFS and MOAC to continue to ensure that residents that are unbanked and underbanked get connected. Thank you.
Thank you for those incredible presentations. Members, I know Rep. Young has a question. She doesn't even have to raise her hand. So, Rep. Young.
No, this is almost like a proud parent moment. We have Chelsea Niblett from my community here. Chelsea started with a tool savings sharing. They used to have a van or a little truck, and to do community cleanups and beautification projects, you could reach out to her and her partner, Becky, and they would bring their little van, and you could do all these amazing projects. And now to see her here with the City of Detroit as a director on such important work, it's a proud mama moment, I just have to say.
Thank you, Rep. Young.
Now, I do have a question, Chelsea. So right now with the Grow Detroit Young Talent, which is another amazing program where we are able to employ youth throughout the summer, and we know that an employed youth who's making money is a youth who's out of trouble. Let's just also keep that in mind. But are you all making it mandatory for them to have a checking account via a bank or a credit union to get paid?
It is not mandatory. So we work with our partners, Connect Detroit and Detroit Employment Solution Corporation, who manages the program. And we have a credit union partner, diversified member credit union. But students are also able to bring in their own account for direct deposit. And there's also a check moment. So we really want to make sure that there is options available for the youth so that it fits with them and their family situation. But we provide a lot of education around the benefits of direct deposit into an existing account or the new account that they're able to open with credit union partners.
Oh, that's good, because I was wondering about, because people, we know that it's so much easier. Many of us who, get automatic deposit, it makes your life a lot simpler, but at the same time, I get a little weary of mandates like that. So I
Choice
just
is
want to be
very
certain.
important. Yes.
Thank you.
100%.
Representative McFall.
Thank you. I wanted to, if I could follow up on Rep. Young. So what is the alternative if they do not, do they get like a debit card? Because I know employers sometimes if you're unbanked, they will provide you with a debit card, which can also cause problems for people if they're unbanked.
Yes, so that's a great question. Thank you so much, Representative. Yes, so there is a pay card that is available, a check option, as well as direct deposit. But the direct deposit is not just for our partners who are opening new accounts. If a student comes in with an existing account, they can also utilize that. And the program, in terms of the implementation, is done through the partners Connect Detroit and DSC. We're here at the City of Detroit to help connect to those opportunities and make sure that we're providing education, financial education, and awareness around account openings.
Thank you. I appreciate that. Just because I know that sometimes when they get those pay cards, they can get themselves into trouble with those too. Thank you.
I have a question. Other than Lansing and Detroit, where else are you located? If anywhere?
Are you talking about local coalitions or
This type of program?
Yeah, there are, I believe, and chime in if I'm wrong, there's a replication in Oakland County through the Treasurer's Office. They've got a financial empowerment center, I believe, as well as Washtenaw County. Some other areas of the state have had them in the past, but these are one of those areas that were, this is the Financial Empowerment Centers are a program of the CFE Fund, which is the overarching national group that promotes the Bank On coalitions and Michigan Open Account Coalition. So we do work with them, and I do know right now here in Michigan, I've had conversations with at least 2 different groups that are looking to launch their own local banking access coalition, and that could evolve into more of what's going on here. And I do know one city in particular, they're going to be looking at, or at least a particular person in that city is looking at creating a financial empowerment center there.
That's very good, because I'm hearing you're focusing mainly in Southeast Michigan and right here in Lansing, but I know this could be utilized all over the state. It sounds like a very good program, and it brings the people to the financial institutions, which is one of the focuses of this committee. So thank you for your presentation. Are there any other questions before we close out this presentation? Okay, hearing none. Once again, thank you so much for coming. Okay, so we're at that point where we need a motion to excuse Representative Coleman from today's meeting. Representative Breen moves to... Oh, and Markkinen, I'm sorry. Representative Markkinen and Representative Coleman. And Representative Breen moves to excuse both Representative Coleman and Representative Markkinen. Hearing no objections, both Representative Coleman and Representative Markkinen are excused. Okay. Seeing no further business before this committee, we need a motion to adjourn, and that's Representative Bizat. He moves to adjourn. Hearing no objections, we are adjourned.